The next days will decide everything for crypto. We are at very close support levels that used to work pretty well in the past. We are close to the true market mean and close to the active realized price. If the bull market continues, now is the best time to buy. But if we are entering a bear market, we could very easily fall below the realized price. And that's currently at $56,000. The market is surprisingly liquid, as in there aren't that many unrealized losses with the current downturn. Whenever we drop in price, people sell directly, and so most portfolios don't actually look that red. Most people simply just exit. Of course, it's the best time to buy when we are at historically high unrealized losses. Have a look at the net unrealized profit and loss ratio. I like to look at this indicator regularly. The market overall is still in net unrealized profit. So again, this is not the bottom of a potential bear market. This is just a very good bottom in case the current bull market continues. And we're going to look at the drivers in a second. So again, this is the unrealized loss. This is the realized loss. And I find this delta very telling. Many market participants are okay to realize losses at the current price level. Very few people just want to keep holding. So the correction is taken very seriously, the 32% drop. There is an argument to be made that when many people realize their losses, that we could potentially see a turnaround, because the idea is that when it's a new group of investors that suddenly own crypto, that they have a new reference price, that maybe they also have a longer time horizon. And so realizing losses is in general a good thing for at least a medium-term bounce. But fundamentally, we have to ask ourselves, why do we even see a drop like this? One explanation is that enough people are betting on the 4-year cycle. And very often we have seen Bitcoin performing bullish for 3 years to then go down for the subsequent year. And if that pattern prevails, we should potentially enter this bear market and get close to the realized price. But another explanation is that some long-term holders simply don't believe in the asset class that much anymore. Have a look at the realized profit, not the realized loss, but the realized profit over time. Throughout this bull market, from 16K all the way to 125K, we have seen much more profit taking than ever before. Whenever we hit a new all-time high, the profit taking was massive. And now we even see more profit taking without seeing a new all-time high. So everybody is exiting. The long-term holders who are taking profit, but also the short-term traders that are realizing losses. And it's that long-term profit taking that's giving crypto a hard time. Have a look at Bitcoin relative to the Nasdaq 100. This year is when Bitcoin hit 60-something K, subsequently 70-something K, then we went down to 16K. From the 62, 63K top to today, Bitcoin underperformed technology stocks by 24%. So Bitcoin was much more volatile. It saw those massive crashes of 71%, a subsequent rally of almost 300%. There was way more volatility in Bitcoin versus technology stocks, yet that volatility did not get compensated with more return. And this is the potential reason why the long-term holders exit. Maybe the long-term holders don't see the long-term outperformance versus other risk assets anymore. In the early days, Bitcoin outperformed technology stocks very, very clearly. But already, since Bitcoin hit even the 20K at the end of 2017, the outperformance is much more muted, right? If we do go down further, we might even see less performance in Bitcoin versus technology stocks for the last 8 years. Now, some people tell the story that this is all due to Wall Street suddenly giving up. It's all just the Bitcoin ETF that sees outflows. And yes, this is part of the story. The ETFs aren't buying as constantly anymore. But really, the long-term chart doesn't really look that bad. This is the number of Bitcoin that's held through the ETFs, or in the early days, through the Grayscale Bitcoin Trust. And yes, the recent past isn't that great, but we've seen a similar reduction already in February, March of this year. So that's not necessarily the main reason. We could just continue on this long-term upwards trend, which would of course support the thesis that we're going to bounce from here. If you're enjoying this video so far and you're getting some value out of it, then feel free to give this a like. It will help the channel grow. It will help spread the word. Thank you very much. The problem is that the capital flows through the ETFs. So this is now just a change over time. That's not the main driver. The main driver is really the long-term holders. And the long-term holders, they are selling extremely aggressively. Since Bitcoin hit 110K, they are offloading, and they're offloading at a pace that we've never seen before. Usually, the long-term holders only sell when we hit new all-time highs in Bitcoin. This time they are selling even without the all-time high. And we don't know why they're doing it, if it's because of the lack of outperformance versus other risk-on assets, or if it's because the 4-year cycle theory. We do not know what's the major driver, but at least we see who's driving all of this. Now here's what I do. What I still like is that the stablecoin market cap is going up. How much money is flowing from traditional finance into the crypto ecosystem? And we just had the sentencing of Do Kwon, who has to stay in prison now for 15 years. He caused the bear market in 2022. The stablecoin market cap went down. People withdrew their money from the crypto eco space and went back into traditional finance. And that then turned around in October of 2023. Since then, we see money getting into the market again. People depositing from traditional finance into crypto, creating new stablecoins. And what's interesting is that stablecoin growth is at least as quick as the Bitcoin price growth. We can't necessarily say if Bitcoin's growth will outpace or just stay in line with stablecoin market cap growth, but it seems like the two growth rates are somewhat comparable, right? This is fluctuating a bit depending on where we start this chart. Now, how quickly is the stablecoin market cap going up? The answer is by roughly 55% per annum. So if money continues to flow into the crypto ecosystem at that rate, then of course it's very unlikely that we're going to go below the realized price. Problem is only the long-term holders selling. The problem is that the 4-year cycle theory might become a self-fulfilling prophecy. The market is extremely scared. The stablecoin dominance is very high. It has only been higher at the peak of the bear market in 2022 during Terra Luna and FTX, when Bitcoin was close to 16K. That's when the stablecoin dominance was at 16%. But in the last 2 years, it tended to be between 5% and somewhere around 9 to 10%. And there is an inverse correlation here, right? When the stablecoin dominance is high, that's when a lot of dry powder is on the side, and when crypto prices are low. When the stablecoin dominance is low, that's when crypto high. So currently the stablecoin dominance is high, crypto prices are low, and if all of those stablecoins suddenly get deployed again, if people become risk on again, and this is going down, then crypto can very much bounce from here. If there's not going to be a Terra Luna-like implosion, if we do not see any institutions suddenly breaking, and the stablecoin market cap continues to expand at this pace, then there's a very good chance we continue to expand at those 50-something% per annum. Potentially even more, right? Potentially there's even some leverage effect in Bitcoin. The one major indicator I'm looking at is the long-term holder spending. If the long-term holders stop selling, then I'm buying the dip. And historically, it was a good time to buy when the long-term holders started to net buy again. We do not have to buy the Bitcoin dip right now, just in anticipation that the long-term holders will stop selling. We can just wait until this chart flips, because that historically was already a pretty good buying opportunity. It is somewhat risky to get into the market right now, even though the prices do look very cheap, and even though the stablecoin dominance is very high, that this massive selling slows down. Other indicators like the ETFs, they are just noise, and there's definitely some blood in the streets. The market is very much panicked. There's way more realized loss than unrealized loss. I will of course publish a video once this chart turns around again, so feel free to subscribe over here. Feel free to also check out Premium. We have been outperforming Bitcoin quite a bit since we opened the copy trading capital pool. That's open for the Premium members of this channel. The link to Premium is down below, thebitcoinstrategy.com. You can just allocate towards that capital pool starting in January of next year again. Deposits are currently frozen, but they will reopen again in January, so don't miss that opportunity if you're interested in automatically following my trades. Thanks for watching and see you next time. Bye bye.